Let's invite the first corporate on the show, and that is Shriram Properties. The company has given a Q1 update. Remember, this was a recent listing. The stock listed in December. The issue price was 118. The stock opened at levels of 90, but it's never gone back above its issue price of 118. The high on Shriram Properties since its listing has been just about 115 rupees per share. And since then, of course, as you can see, the stock has been struggling. It's now down to levels of about 70 rupees. The Q1 update is as follows. Sales volumes up 20%, sales value up 26%, while the collections have gone up by 34%. We're now joined by Murli Maliappan, the MD of Shriram Properties, on the show now. Morning, and thanks so much for joining in. Your FY23 volume target was 4.5 million square feet, right?
Yeah.
In Q1, you've only done 0.66 million square feet. So are you on track to achieve your FY23 volume target of 4.5 million square feet? And do you have any targets in terms of collections as well as value?
We are absolutely on track. This is how the real estate industry functions. Always, it's queued on Q3 and Q4 because of the festivity and all that. So particularly on the mid-market and affordable housing segment, most of the buying decision is taken towards the Dasara, Diwali and all that, particularly in South India. So we are perfectly on track compared to Q1 last year. If you look at it, we registered a good amount of growth compared to last year. And this is the same trend has been for the industry also. Across the industry, this has been the trend, particularly on the mid-market and affordable housing segment. We are on track on 4.6 million square feet in pre-sales number this year. And also collections, we expect to hit a good number compared to last year. It will be close to about 1,700 crores is what we are looking at on the collections. That is also on track now. So business is on track. As you've seen, we have declared results last March with a good profitability. And the profitability trend is likely to continue for this year 23 also. As I said earlier, we are completely on track with respect to sales, collection, construction, and also debt reduction, which I talked about it last time. So we are well on track. We have a current net debt of about 350. We are looking at bringing down to close to about 200 by FY23. So we are on track on every matter today. And environment is supporting us, helping us today, particularly on the mid-market and affordable housing segment. And the markets where we are present, it's supporting us a lot today, and we are well on the track.
Okay, well on track to meet all of your targets. Sir, good morning and thanks a lot for joining us. This is Pavitra. Last time we spoke, you also said that you're looking at price hikes of around 10% for this full year, so for FY23. Have you been able to take any part of it yet, and how much?
Yeah, we have already started increasing the prices. Okay. So Q1 also we have seen some price increase now. We will, as I said, my guidance was about 10% plus. I think we should be able to get closer to 10% now. So currently about 8% is the positioning we have taken now, but market is likely to support up to 10% is my view today.
Could you give us an indication of what the value then will look like? Your volume growth you've given us 4.6 million square feet, but considering that you have a price hike also that you've planned, what would the value growth look like for the company in FY23?
It should be about, in the ballpark, about 2,000 crores is the number, is what we'll be looking at volume, sales value.
Okay, go ahead.
And any signs from your customers? Rate hikes have started. Are they pushing forward their buying targets, considering that perhaps 6 months later we would see a higher rate increase, so they want to lock it in at current levels? Can you tell us how do you expect this rate hiking cycle to impact your buyers and their purchasing plans?
Yeah, so decision making, the rate hike on the home finance has not impacted much at this point of time, because people are going for the flexi loan and they are taking for 15 to 20 year loan or even 25-year loan. They all know that, this has been a flexible one and they could reset any point of time. So they are taking a 15, 20-year call today. The second one is the work from home is coming into an end today, and all the IT companies, I believe, have issued notice to all the employees to work at least one day from the office, which means all of them, people are in the rural towns. They have come back to cities today. For example, today in Bangalore, you don't get a home for rental today. So that is the biggest concern which has come in today. So people are looking at, buying their homes, and they also know that because of the inflation and also the price rise likely, so they would like to lock in. So we are seeing a bigger demand compared to what last year it witnessed. So we are very confident that 23 customers are looking at, going with their decision of buying homes aggressively than what they were.
All right, that's showing up in your launch pipeline as well. You have 16 new projects that you're looking to launch. Can you tell us how much of this is going to, around 8 million square feet. So can you tell us how much of this is likely to come through in the next quarter?
Q2, we should have about 4 projects. Between Q2, Q3, out of 16, we would have launched about 11, and about another 5 projects in Q4.
What is the interest rate you're borrowing at?
Borrowing rate has come down. Our target is to bring down the debt reduction. Debt cost also. One is absolute debt. As I said, from 350 crores to 200 crores net debt is what we are targeting this year. And also borrowing cost was about 13.7%. We are targeting to bring it down by 2%. Already we made some good progress. We got some refinancing done. So it is down by 2% is what is the year target.
Okay. Also, you were speaking about the new launches. Can you tell us which markets these are coming through for you? And we know Hyderabad is a new market. So how is that panning out? And are there any other new markets that you're getting into?
No, currently Bangalore, Chennai and Hyderabad, that's the market we'll be focusing. As you know, Calcutta project is doing phenomenally well. And sales has been good. We just started delivering the phase 1 units of about 600 units and received a tremendous response on phase 3 and next level of projects. So the markets we are focusing now is Bangalore, Chennai and Hyderabad and Calcutta. This is good enough for us to achieve this number, what we are looking at. So if we would like to achieve this number and get into the steady growth of about 5 to 6 million square foot for the next 3 years' time. So if we do that, we will be able to register some good profits and as well as good growth. That's our focus now.
Your aggregate saleable area is 8 million square feet for FY23. Can you break that up geographically for us?
It is mainly between Bangalore and Chennai and partly Calcutta. So out of 8 million, I would estimate roughly about 500,000 square foot coming from Calcutta on the new supply. And Chennai will be about 2 million and the rest will be Bangalore. And Hyderabad is about 1 million.
Just one final question, sir. I think your average realizations per square foot are up around 8% if you look at it on a year-on-year basis. Can you tell us where this is headed?
Average realization, as I said, one is, two things. One is price increase, the other is realization also is going up. So we could hit about 10 to 12% average price increase is what we can look at. And from in the Q1 compared to last year, there is 8% year-on-year increase which is witnessed.
We'll leave it at that. Thank you very much for joining in. That's Shriram Properties detailing out their FY23 outlook. Some targets as well have been set by the company as they've explained to us. Get into a break on that note. We'll discuss what's buzzing in the commodity space. Manisha Gupta joins us next.